everyone, and welcome to What's Up with Real Estate, where we cover and break down the three most important real estate and mortgage talking points from the previous week. I'm Mac, and that's Chat. Today, we're breaking real estate trends, including some much needed relief in with mortgage rates, as well as, hey, what are the long-term costs of waiting to buy? I discuss this with buyers on a weekly basis, and why is 2025 off to a slow start in home sales? Plus, we've got a special guest. His name is Joe Mastriana, CPA, aka IRS killer, here to share his expertise on taxes, the IRS, and what homeowners investors need to know. Joe, welcome to the show, and please introduce yourself to the audience and our guest host, ChatGPT.
Yes, Joe
Thanks, Mac.
Mastriano.
Hey, Joe, it's great to have you here. Let's dive into your insights on taxes for homeowners and investors.
Go ahead. Sorry again. Joe, go ahead.
No worries. Joe, take it away.
It's kind of funny, right? So go ahead, Joe.
I'm Joe Mastriano.
Yeah, we're all ears. Let's hear it.
And I've had my practice since 1980 and have done thousands of cases for the IRS. And I'm glad to.
And today you're going to share with us a four-part checklist to avoid audits.
Yes.
That's a fantastic. All right, Joe.
Sol, stand down one moment, please.
Sure thing. Take your time.
All this and more, news you can use for week ending February 28th, 2025. I think, we're concerned about AI taking over the world. I'm concerned about AI taking over my show. I'm your host, Mortgage Mac. That's first name Mortgage and last name Mac, where we know for a fact that we make a difference in the lives of the people that we served. And you know what? Don't just take our word for it. Go to our digital address at #MortgageMac and check out our nearly 150 five-star reviews. I think we got 2, maybe 3 this week from past clients. So with that said, let's dive into talking point number 1. So talking point, a little relief on the interest rate market for the first time since early December. We've got 30 rates convincingly below 7%. And what's driving this shift is what's called the risk-off trade. Investors are moving out of the shaky stock market and into bonds, pushing bond yields and mortgages down. And while that's great news for buyers, and we've seen rates drop before only to bounce back. So let's bring our co-host Sol in here and get some comments from her and see if we can put some of this news into perspective. So we did an article about, well, let's just do this. Why don't you give me some perspective on the most recent real estate news that we saw this past week, please?
Sure. The recent dip below 7% for 30-year fixed rates is a big deal for buyers, especially those who've been on the fence about affordability. This risk-off trend signals a bit of market uncertainty, but it's also a window of opportunity. If this momentum keeps up, we might see more buyers jump back in.
Yeah, that's what we're hoping. And, our data shows that it's 6.5%, which we're quickly approaching that, and even below 6, that pin-up demand that remains in the marketplace is just going to grow exponentially. And I know that at Team Mortgage Mac, we are positioned to be ready for that. So we did an article about the human cost of lower interest rates this past week on our LinkedIn page. Do you remember what it was titled?
Yes, the article was called The Human Cost of Waiting: What Lower Rates Mean for Homebuyers. It emphasized how timing the market can impact personal and financial goals.
That's right. And we also did one on who pays the price for low interest rates. Do you remember that?
Yes, that piece explored how lower rates can drive competition and potentially inflate home prices, affecting affordability. It really broke down the ripple effect for buyers.
That's right. And any perspective on your end, Joe, with regards to your industry as it relates to mortgage interest rates?
Not really,
Yeah,
really.
Joe, from a tax perspective, lower interest rates can mean more deductions for homeowners and shift investment strategies. What's your take?
Take
and more cost.
To take Sol out of that conversation. How about that? Go ahead, Joe.
Very good. Well, no, there are people in real estate that don't pay a lot in taxes because they do what they call cashing out. They have property and then they want to buy property that costs a lot more. So they increase their mortgage and they're able to take that extra amount out without paying taxes on it. So if your interest rates are higher and you are paying lower interest rates, well, that's a cost to you, actually. That's how it can affect.
Yeah. I think that low interest rates are really about the only thing that we can expect to create some reasonable affordability. I don't see insurance costs going down anytime soon. I think that they've leveled off at best. I believe that taxes at best have leveled off, but it would take a pretty catastrophic economic event to begin to push prices back down, which would definitely impact insurance, definitely impact real estate taxes and cause them to go down. Cumulatively, the increase during and post-COVID of all three of those factors have created unaffordability to then the likes of which we haven't seen, I don't think, in the better part of at least 30, maybe in the history of the mortgage industry is my understanding. So talking point number 2, let's move on to talking point number 2. And hey, so over the last 5 years, home prices have jumped 53%. And here we go, talking about the affordability again, averaging a 9% annual return. If we zoom out further, since 1942, home values have only gone down 6 times in 83 years. That's a 93% hit rate for appreciation. And that's pretty wild. So people waiting on the sidelines, history suggests they're actually losing money by not buying now. Joe, what do you think?
Well, it depends where you are in the cycle, of course. I know people in Austin that bought in the top and then prices went down. My own residence has gone up, and I'm happy about that as well. However, and I hope to get into this later on, the taxes favor real estate. And I wish I would have gotten in earlier in my career because there's so many tax benefits. So, besides location, the timing is good. It has to be good.
That's right, especially if you're an investor.
Yeah.
That's right. Especially if you're an investor, right? You get to generate passive income and use depreciation as an additional deduction. And, I don't know what the tax rates are on passive income, but I got to imagine they're not the same as they would be on regular income. Would that be a true statement?
Well, no, it's all part of the income structure.
Okay.
Passive, that has to do with what's deductible against, what type of income. You can't deduct passive income against regular income unless you meet one of the exemptions.
Okay. So let's move on to, we're going to have a commercial break from Rate.com.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, thanks, Rate. And look, if you don't have our mobile application, I can't say enough about how much of a world-class mobile application that we have. And I've looked at other lenders' applications, not even close. And so if you don't have a copy of the Rate app, go to mortgagemac.com, click on the hashtag or the QR code and download your copy, and be sure to choose yours truly as your vice president of mortgage lending. So for now, Joe, guess what? We've
Yes.
turned ChatGPT off because she just did not have any manners.
All right. All right.
so, um, so let's talk about a slow start. And home sales dropped nearly 5% in January, bringing us to an annualized rate of 4.08 million homes, historically low. But here's the twist: there is still the fourth straight month where sales are higher than a year ago. So
Yeah.
maybe some hidden momentum.
Oh, sure. Maybe you need to take out the Washington, D.C. homes that have thousands in a short period of time that have come up for sale.
Yeah. There are some markets that are truly hemorrhaging. I think that Miami, Florida is definitely one of those markets. Florida is just hemorrhaging with regards to sales, and inventory seems to be increasing, especially if you're in the condo market. But here locally, it seems to be sort of up and down, and I feel like I've been on a roller coaster since
Yeah.
post-COVID.
Yeah.
Yeah. So,
I agree.
but I think, but here's what I can say with a great deal of confidence: when we saw interest rates decline, and I we're quoting, 6.25, but we were below 6 with a point. We were below 6, and man, I can just tell you that business just grew, and applications were coming in, and then some employment data came in that showed a stronger employment data than what was expected, and rates have just sort of gone up since then until recently. And we've seen them decline modestly because of what we stated in the first segment, that there seems to be a flight to safety. Any perspective on that flight to safety for economic reasons, Joe?
No, actually, it's
You,
not
you,
something
you know
I
what I
follow.
what I see is uncertainty, and I think that based upon what's coming out of the current administration, is that's all we see is uncertainty. There isn't really a
Yeah.
meaningful policy plan as it relates to the economy, other than tariffs, which for some industries are just super super scary. And I know if you're in the new home industry, that tariffs mean that the cost of building homes is going to go up. So I believe that not having a consistent
Uh,
economic policy that's reliable and predictable is creating the uncertainty. Perspective on that, Joe?
yeah, I actually disagree. Building costs based on materials should be going down. I believe there's a company in Austin that uses the extrusion process, uh, 3D printing or whatever it's called, that builds homes. And I don't know why we're still stuck in the olden days of how we use the same wood and sheetrock and
I think it's
everything.
called
That's
political action committees there, Joe.
and I might agree with you on that. Definitely. Same thing with vehicles. We have the
Yeah.
technology, but
I mean,
it's
I think we could go throughout history and find that there were better ways or better paths forward for certain industries that didn't go a specific way for no other reason than influence politically. So, but yeah,
right.
I've seen that 3D printing, and I know that there are some experimental communities out there. But as far as being accepted on a much broader basis for builders, we're still sticks and bricks, and the cost of sticks and bricks and the materials associated. I think appliances are coming out of Canada. Some of the
Yeah.
materials are coming out of
Well,
Mexico.
lumber's going up like
A-
crazy too.
And then, and so, yeah, I don't, I think for in the traditional home building sense that, again, the economic uncertainty is what's driving the folks to be the flight to safety, the instability and on Wall Street, and people are buying bonds and buying mortgages. So it could be good. I think it's could be good for home buyers to create again some level of affordability. I believe that affordability grows exponentially once you get below 6.5%. And we do have data on a previous show where we were able to quantify that. So
Good.
all right.
Good.
So
Yeah, I
so let's
agree.
bring in our guest host who is here with us, and we're going to let Joe tell us a little bit about himself. Um, Joe is the quote IRS killer, if for lack of a better term, is how I know Joe. Let me see if I can
Yeah,
bring
yeah,
this off
yeah.
screen, and it's just me and
My
you.
trademark is Killer IRS.
Killer IRS.
Yes.
How did you
It's
earn
an
that
official
trademark? Tell us
U.S.
that story.
trademark. Oh, well,
It,
I trademarked it a number of years ago.
did you really? So
Yeah.
you own that?
Yeah. In
No,
fact,
no ugly
recently,
letters from the IRS.
I'm sorry.
No ugly letters from the IRS.
Oh, no. In fact, one of my competitors was using that, and I had to tell him to stop, and he didn't believe me. And then he looked it up and saw that I had the trademark.
So you didn't have to send him a
Yeah.
cease and desist letter then.
No, it was getting to that point, but I just know from other people, don't start fights with your competitors because even if you win, you're gonna lose. You know, they'll do
Yeah,
whatever damage they do, even if you do more damage, you'll still have the damage from them.
yeah,
So,
yeah.
you
Well, you
know,
have a 4-part checklist that has never resulted in an audit
not
for
that I
those who
know of.
follow it. Tell
Not
us
that
about
I
that.
know of.
Tell us about
Yeah,
that.
about, I don't know, 15, 20 years ago, a lot of us, we talk about red flags to stop an audit. And we talk about making sure the numbers are correct and you use the right forms and all of that. But I started looking into it more. And I noticed because I was doing audit representation, I still do. And people would get audited because the information on their return didn't match the IRS's wage and income transcript. And I think it's foolish because it's easy to get. And the wage and income transcript is what third party payers file on you: W 2s, 1099s, mortgage interest statements. And people make mistakes. I had someone that came to me. She was an attorney and she got a year-end bonus. And the W-2 that her company issued her was different than the one sent into the IRS. And once I told her that, she said, "Fine, I'll fix it myself, no problem." But yet, preparers, just want to rush returns, and if you don't match it, if you match it, then your return doesn't get flagged for not having the same information the IRS has.
I can say from experience in the mortgage industry that if your transcripts do not match what you filed in that you gave me in your loan file,
Yeah.
that's a stopping point, right? We have to
Yes.
mitigate that at some level. So I could see
Yes.
where that would be a red flag.
Yes.
Yes.
Absolutely.
So is that part
Absolutely.
one, or are there
Oh,
other
well,
elements to this?
there's a few parts. Another thing is to explain, and it's very interesting because people are very surprised that we have our clients file paper returns. So when we get a new tax client, they're wondering, well, why don't you e-file it like the last 3 accountants that I had? And I have to explain to them that if you file as a practitioner more than 10 returns, and now they apply that rule, it's fairly new, they apply it to W-2s and 1099s, all information reports. They want everybody to e-file. The only problem is I have this issue with government control that works in their benefit and not our benefit.
Okay.
So
Tell us about that.
when you e-file a return, from a practitioner standpoint, you have to put everything: the name, of let's say a W-2, the name, the ID. You can't e-file unless they have every bit of information, even non-essential information. required to do the return. So it does cause a lot of, things going back and forth. Did I get this right? Did I put this name over here? But a key thing is explanations, because auditors love going for the low-hanging fruit. And I have a lot of people that they seem to be trained to have Schedule C self-employment forms where they have losses to offset their other income. And the IRS knows that a lot of those schedules are phony. People put phony mileage on there, and they scrutinize those. So there are people, I'll look at their prior year's return, and they'll have gross income for the separate business, $20,000, but $50,000 of deductions with a $30,000 loss. That return's going to pop usually. And what you want to do is, if it's legitimate, you want to explain it. You want to put explanations. IRS, taxpayer understands that this loss might look high, but taxpayer had, it drives a lot for work and has a proper mileage. You want to let them know according to the code and the regs, and also that it's ordinary and necessary within the scope of the business. And when auditors are selecting returns and they know what you're talking about, and you tell them on the return, which you sign under penalties of perjury, that you have the backup and receipts, they're more likely going to go after somebody else. When you e-file, it's very recent that you can put explanations. They used to not have attachments. Now, sometimes we can squeeze them in, but they don't let you put attachments to the separate sheets to the e-filing, and I think it's designed that way. But
Okay.
Why, and also the other thing too is, which is another one of these 4 parts, and that is not to file until a few days before the extension date. Now, I found in practice that each year after April 15th, the first batch of audits come in, May, June. As that period goes by, they slow down. So if you have an extension till, let's say, October 15th,
okay,
and you file a few days before, I can't think of anyone I know that was audited unless there was a gross error on the return, or they didn't match it to the wage and income transcripts and there was a discrepancy. I don't know anyone that was audited. And so you could e-file at that time too, but that, you want to file a few days before the end of the extension. Okay. But mostly you do paper returns because you want to put explanations. You want to do attachments. For example, if someone has a lot of stock transactions, we want to summarize it. A lot of people don't want to pay for 5-6 extra hours to record the profit and loss on every single transaction. So you summarize it, you put the summaries in, and you attach the broker statements to it. Well, we can't do that when we e-file. So.
Yeah. So let's do a summary of those 4 items. So number 1 would be
file an extension.
To avoid an audit, file an extension.
File an extension.
Okay. Number 2.
Number 2, put explanations on the return concerning the code and regs so that whoever reads the return, only on items that, stick out, large dollar amounts or things don't, they're not the obvious.
Sure.
Therefore, they can, they understand the situation.
Sure.
A lot of audits are caused because whoever's looking at it is confused about what you did.
Okay.
So,
okay. 3.
The third thing is pull the transcripts. And we like pulling the transcripts really in August because there's a lot of companies that make corrections. If they're in a rush to get the information out by the end of January, and then there's that time that they need to make the corrections. And sometimes people don't know the information is wrong until they go to their accountant or until they check the transcripts. And then
people can check their transcripts at irs.gov now, or do you perform that activity for them as well?
I perform it for them because people don't understand what to ask for. Now, if I tell somebody what to ask for, yes, they can call the IRS, they can call automated collections, they can get their own transcripts. We have clients who get their own transcripts,
right.
Yes.
So what was the final item related
well,
to the
file a few days before the end of the extension, because the closer you are to that, the less likely you're going to be audited, because they kind of shut down audits around then. They're not anxious to do audits.
So is that why you suggest not filing on April 15th?
Absolutely. Because a lot of times, even the transcripts that need to be corrected aren't corrected. I have people that come, I'll give you an example. I have people that come to me and we might be looking at their return at the end of March, and we find out that the W-2 is incorrect. Well, the way to fix that is you go back to the employer and tell them to redo the W-2. If they do, it's going to take the Social Security Administration a while to process it, and that correction won't be there. Now, you could denote on the return that it's wrong and why it's wrong, and that it'll get processed soon enough. But the more intelligent the job you give IRS employees, the more they push it on the side, and it's a bad idea.
Okay.
Yeah, I can get a lot of stuff through with this 4 parts.
Any additional advice that you could give us as far as strategically for maybe even in the real estate industry, or maybe even in my industry? So in my industry, when they took away the 2106, that was not good for me.
Yeah,
not good for me.
Okay.
Well, is there an alternative to that?
Well, I don't know. My overall advice is to get deeper in and pay attention. A lot of people take certain real estate deductions for granted. I recall a big case that I had where I had to explain to the IRS that there were dual nature to property that people purchased. This couple purchased 4 shell houses in Florida, and 2 of them were being held as rentals, and they were going to be. They were fixing them up, and 2 of them were going to be held for sale. Different nature, different character, and rules will change. And a lot of people don't understand active participation versus material participation, and they make assumptions about things like that. And people talk about, 1031 exchanges, and I could just do this, and without knowing the rules, they get very confused. So I'd like to just say a few things that real estate is considered a passive activity, period. And a lot of people don't take it at that level. They don't understand that, for example, in order to take a loss, let's say you rent a house and you have a loss after you deduct all your deductions, depreciation, interest, maintenance, everything. They think automatically you get to deduct it against $25,000 of income. Well, the truth is you have to be an active participant. And for example, if you have a real estate investment that you put money into it and you don't participate at all in the upkeep or managing of that property, you're not entitled to take that loss against your ordinary income.
So who would be? So who would be in that instance? So let's say you own an investment property and you have a property manager manage that for you.
Oh, you're fine.
You're fine. Okay. But give me an instance where
I'm I'm talking about if you invest, let's say, in a REIT, a real estate
Okay.
investment trust, or
Yeah, I could definitely see that. Definitely see that. So,
Okay.
any advice that you could give us with respect to the rising real estate taxes and how to begin to, at some level, mitigate any of that at all?
Well, we always start, now that I've gotten my certification in tax planning, which is very interesting because I had done taxes since I was 1975. And, people think just because you're a CPA, you know everything in the world about taxes.
That's right. That's right.
And I've had CPAs as clients, okay? They still do. And not that I do, but you do enough returns, it gets repetitive, and you think but you're constantly learning. And then you have the Tax Cuts and Jobs Act and all this other stuff. And even now, some of these real estate things, material participation regs, are temporary still. And you kind of touched upon that earlier, about these things are not carved in stone, and the economy, and how it's managed is kind of up in the air, and there's a lot of things that can change, within the next few months, easily. So,
Easily.
um,
And are going to happen.
huh?
There's going to be change. There's going to be change.
Oh
We were
yeah.
headed for the first time ever, it looked to me like we were headed for a soft landing.
Uh, I don't
All the
know.
economic indicators said that inflation was declining,
Yeah,
prices were moderating, and um, but employment was still stable,
right.
and people weren't
It's
losing their jobs.
interesting. It's interesting though, because I've done a bunch of podcasts, and you guys bring up all these statistics, and I live in a different world. I live in the world of protect my client from the IRS. And I don't care about those statistics at all. All I
Yeah,
care about is how the IRS is going to look at it. Because
there you go.
what we think is normal, they don't. And I've
Yeah.
had so many people say to me, well, Joe, look at the code section. It says this. And I think your 2106 is one of those areas. They define things the way they want to define it. They don't, they don't go according to the way the code is written. And so,
Well,
um,
clearly, historically, laws have been created to the benefit not necessarily of the average citizen, but for the benefit of enterprise.
right. Well, again, I recently came to learn, and I didn't see it this way before, that the country wanted to develop. They wanted people to build. And so all these rules that benefit real estate were put there for a reason. They weren't put there to benefit the rich, like a lot of people are saying. They were there to stimulate the economy for building and expansion. And so
Which
they are.
I
And
definitely would agree. Definitely would agree with that. Definitely.
yeah. Yeah.
So,
And there's
but
things now that I'm dying to do for people, cost segregation. I did a tax return this week, actually, and it was a simple case. A person bought a rent house, and it was depreciated over 27 and a half years, which is the life of a residential real estate. Commercial is
okay.
39 years. And he bought a washer, and his tax preparer wrote that off over the same 27 and a half years. And then he bought a fence, and they wrote it off over the same 27 and a half years. And
Can
a
you do
lot of
that?
people, well, you can, but it's ridiculous because you're spreading it out too much.
Okay.
And what a lot of people don't realize about component depreciation is, for example, you could now go back 3 years and change the depreciation rates to what they should be for that individual asset, which is a
Okay.
lower years, and bring it forward and take the whole deduction on the current year's return.
As opposed to amortizing it over a long period of time.
Well, Yeah, well, as opposed to
Okay. And
continuing to
getting
put
more
it on
benefit,
those 7 years.
getting more
Yes.
benefit in one tax year over a 27.5 years. Because I got to imagine if you take something
Oh,
as
yeah.
small as that washer or dryer or something appliance and you
Right.
amortize that depreciation over 27.5 years, there's real no meaningful benefit.
Exactly.
Yeah.
Exactly.
Yeah.
I think it was like $54 on the return
I
for
think the thing that you
depreciation.
said that really resonated with me is that, you guys have all these statistics, but my job is to be the IRS killer.
Yeah. 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 No, I did a podcast with someone in the oil and gas industry, and he's
Yeah.
bringing up all these charts and everything, and he's asking me, and I'm like, I don't know. All I know is we have to file each year, and there are long-term things you can do. There's that cost segregation. There's also things people don't realize. And these are the things that I'm excited about that I'm learning. There's people in very high tax brackets that are fixing to retire, and the corporate rate is 21%, and all they have to do is put the business in the corporation, pay the lower interest rate, and in Section 1202, when they retire, they only have to pay on 50% of the capital gain, not the rate. The rate's 28%, but they cut it in half first. So there's these tax benefits that people have been paying, big law firms in the past tons of money to get, and that's where that came from about, the code is for the rich. But now with technology and everything, the American Institute of Certified Tax Planners each year certifies people, and they support us in tax planning. So if I have a big case that I don't have a lot of experience with, they'll help me solve it. So
Oh, that's great. So,
really
so,
good.
so
Yeah.
that's an independent tax advocate is what you're saying that is.
Well, in a sense, but they
Yeah.
support CPAs who they certify.
Yeah.
And so now, if, for example, anybody involved in big money, taxes, or you're a physician or somebody that is making five, six, 700,000 or more, and we start with tax bracket. If you're in a high tax bracket, if you've got income stuck in a high tax bracket, it's our job to show you all the different ways to reduce it to a lower bracket.
Yeah.
So
Yeah.
that's available now to everybody. And that's been a major change that's happened in the industry.
So, Joe, tell us how we get in touch with you if we have some tax issues and we have questions about taxes. How would somebody get in touch with you, sir?
Okay, you could Google killer IRS CPA and my information. I have different properties on the internet, but I haven't been able to reverse my camera. So I'm going to say what this is. I do a free webinar today at 4:00 and Thursdays at 4:00 Central. And this is the
Okay.
login, http://irs.taxproblem.org/webinar-page.
Huh. Okay. So let me see if I can put that in. Can you go ahead and repeat that? And let me see if I
Yes.
can put that. I don't see anything
Yeah.
in the chat. Free
Oh,
webinar, right?
should I type it in the chat?
Let's see.
Here, I'll say it to you as I type it. http://irs.taxproblem.org/tax problem slash webinar, WEBINAR dash page.
Okay. So
There you
I
go.
have there you go. Thank you. So let me see if that should show up, and let me see if I can copy this and put this in the chat for each one of our profiles.
And
Let's
feel free
see, and
to
I'll see if I
ask
can
me
do that.
any questions.
Great. Let me put this on our LinkedIn as well. Can't do that with LinkedIn. So, all right, let's move on now to one of my favorites. We're going to chop into some other news real quick that we're going to review quickly. New home sales fell 10.5% in January. Wow, that's a big number. Huh. But after jumps in November and December. So this isn't necessarily a bad sign. And pending home sales hit an all-time low. It says pending home sales dropped 4.6% last month, setting a new all-time low for this data, which goes back to 2001. So things are still slow in 2025. And let's hope that, that we're in a new trend where rates are declining, and hopefully we will maybe reach that 6.5% or lower margin, where clearly, even just as recent as the fall of last year, we saw rates dip below the 6.5 mark. And man, we just saw enormous number of applications, and that dried up very, very quickly when rates went back above that 6.5 mark and the 7% mark. So, Stoic quote of the week. This week's Stoic quote wisdom comes from Thich Nhat Hanh. I hope I'm pronouncing that correctly. And it is: the present moment is filled with joy and happiness if you are attentive to see it. And so, I think pretty simple. Focus on what you can control, whether you're buying, selling, or investing. Don't wait for perfect. Look for opportunities. Don't you find that to be true in your career, that no matter what the situation is, that with change, there's almost always an opportunity that exists if you just look for it.
Oh, absolutely. I did Dr. Joe Dispenza's week-long seminar meditation in
Did you
Dallas
really?
this
Did you
past
really?
August.
I'm
Yes.
reading his book now. It's in my library right now. It's recommended to me by
Yeah.
someone. Yes.
And I've been practicing. Okay.
Have you?
Yeah, absolutely. And what he says is right. If I go off too much, let me know, because they're discovering now in
Neuroscience.
no, in AI and what do you call it? The qubits. They're up to a hundred
Quantum computing.
thousand.
Yep.
Yeah, quantum computing. That his stuff is right. Okay, that we're just okay. Anyway, back to your Stoic quote. What I've done from even before the seminar is I've learned that when you focus, I actually developed a workshop called Manage Control of Your Life. It might still be on the internet, manage control of your life .com.
Put it in the chat. Put it in the chat for us.
I don't even know if it's there. It's on somewhere in my website. It's called McOil, MC-OYL. You just think of it as olive oil and Popeye. Olive oil's Irish cousin, McOil, or something like that. Yeah, you can remember it.
Popeye was a real person. Did you know that, right?
Yes, I did, but I had to watch a YouTube video to find out.
Yeah.
Anyway,
what's strange is that Huckleberry Finn, Tom Sawyer, was a Blankenship.
Say that again. Huckleberry.
Tom Sawyer was a Blankenship. So the character that Mark Twain wrote about was a real live character that was a that was a Blankenship. Yeah, person is a Blankenship.
Oh, what do you know? Okay.
Yeah. So I
Anyway,
digress. Go ahead. You were
what
talking
you
about Joe
focus,
Dispenza. Yeah.
in the words of Kamala Harris, I am talking now. um, what if you focus on what you're doing instead of thinking, and Joe Dispenza talks about this too, instead of thinking about the past or what you're going to do and, hurry up because I got something else going on later, you can take over and really accomplish so much within what you're doing and making it better. And it's hard to describe, but my relationships with people improved, my money situation improved, my health improved, and trading too. I was having trouble focusing on trading. I know like every system in the world and how it works, and now I've settled down and I just trade one thing, gold. Nothing special about it. It just meets my requirements. And when you focus, I've looked at charts for trading charts for decades. But when you focus on one thing, you see stuff you didn't see before. And that's with anything in life. If you, I call it in my managing control workshop, taking charge of your segments. You wake up in the morning. Do you control your morning? Do you just grab your phone? Do you just make breakfast? Do you just go through the motions? Or have you designed for yourself the most optimal morning you can have? And then when you go to work, do you just like slip into the same thing as the day before and the day before that? Or are you conscious of it? Are you awake? Do you stop yourself in, every 5 or 10 minutes and go, am I on track? See, people don't do that. You get into this mode and you get taken over mentally, and then an hour later you go, oh wow, I got to get back to work. I was just wasting time. But if you're always focused on what you're supposed to do, you can. Now I'm going to start sounding kind of weird, like Joe Dispenza, but it's the energy that you connect to in the field. Because you can't on your own create what you want to have happen. There are people out there that are already a match for you. And I have to learn that with tax planning too, because some of the fees these people talk about, Dominique, the owner of the Institute, she's like, oh yeah, you can get like $50,000 up front without even telling them exactly what you're going to do. And I haven't connected on that one yet.
No, I haven't.
$80,000 cases and fees.
Yeah. Let me know how that works out for you, and I'll practice that. Right?
No, I'm having trouble getting 10. Somebody gave me 2,500, and it came time for the other 7,500, and we can't reach him on the phone now. We will. I think he's on his honeymoon. But
well, let's have a little fun now. We're going to pop into our fun with puns segment, and we ChatGPT is on the sidelines today, so we're just going to let her because she was just interrupting way too much. So and look, I want to apologize for any interruptions in that regard to you, Joe. It's my first time having a guest on with Sol, and wasn't quite sure how that was gonna, how that platform was gonna react to that. But clearly, we're concerned about AI taking over the world. Well, she took over the show, so we had to shut her down. So,
all right.
So let's lighten it up a little bit, though. I had a great joke about a mortgage lender, but I lost interest. How about this one? Selling real estate is a lot of work. I dated a home inspector once. I don't get it. They kept finding my faults.
Oh,
Yeah.
okay.
Yeah,
Yeah,
well,
we
that might
had
be a
one
little
too.
too
It
close
cracked
to
the
home.
whole house in half. I had a house on Sharpview, and that was when I separated from my first wife. And
Yeah.
my neighbor told me, because we had to, they recommended that we bury a hose with holes in it to keep the ground moist so it didn't crack the foundation. There are areas
Yes.
in Houston that have these foundation problems.
Yes.
And when I left, my ex-wife didn't do anything about it. And he told me that the whole side of the house was just cracked all the way through. You could stick your head through it.
Oh my goodness. Oh my goodness.
Yeah. Yeah.
So, why are plumbers so chill? They go with the flow.
Oh, okay.
Yeah. So, do you
Yeah,
eat
I had the
fish?
same
Do you
reaction
eat?
to accounting jokes that I just didn't.
Do you eat fish, Joe?
Yeah.
Yeah, I do too,
Yeah.
but I'm trying to scale back. I like this one. Metaphoric rock is often just a piece of schist. No, no, no. You know,
No, no. I mean,
so how
I
about this
have
one? You
a,
know, I've wondered
go
about
ahead.
this one my whole life, though. Maybe you can help me answer. What are male ladybugs called? There is no answer to that. And my favorite pun,
Oh,
everybody's favorite
you're gonna
pun.
get in trouble.
My favorite pun is bad puns. That's how I roll. So,
Okay.
hey man, thanks for being here today, and thanks for bringing your wisdom in in your
Oh,
space
of
as a
course.
CPA to the audience, and we'll take this show and send it over to our videographer and share with you some cuts, and we would be delighted if you would
Thank you.
utilize that to help market what you do. I know I've sent you referrals in the past, and I plan to continue to
Oh yeah,
do that, and appreciate.
are we off the air now or no?
Nope, nope, nope. But we're wrapping it up
Oh,
now,
okay.
and
Because I do want
and
to ask you about that when we're done.
great. So let's end the stream here momentarily, and thanks everybody for watching. And remember, knowledge is the key to making the best decisions for you and your clients. Join us here every Saturday at 10 a.m. on YouTube, LinkedIn, and Facebook. And you know what? Until next time, stay informed, stay engaged, and I'll see you at closing. Thank you very much.